Hello everyone, I'm honored to be here to present the financial plan for Tom and Aaron Eggman. After our several time meetings, many times review your personal background, statement of financial position and cash flows. Let's talk about your goals, financial strengths and weaknesses. Each analysis, each area analysis, including fundamental, insurance, investment, retirement, tax, and estate. After all this, I will give you detailed recommendations according to each area. Here is your financial objectives. You need to be debt-free or mortgage at retirement. The Eggmans would like to minimize estate taxes and avoid probate. The third goal is you hope to increase tax advantaged savings. Tom would like to transfer the coal business to Justin at his death or retirement. Both of you want to retire 6 years later. At that time, Tom will be age 62 and Aaron will be age 57. After establishing your goals, let's analyze your strengths and weaknesses. From your statement of financial position and statement of cash flows, combine it with the calculation of financial ratio. You have a strong net worth. The net worth ratio is around 80%, which is very high, very good. And you have a reasonable saving rate, is almost 40%. However, you still have some weaknesses we need to solve together. That's the most important reason why you come here, why you need financial planner. From the financial statement, you have a deficit of $3,580 deficient in the annual cash flow. And by renting the candle, you have a negative cash flows. In the insurance part, there is no contingent beneficiaries named in the life insurance policy. For the disability insurance, even Aaron have a disability insurance, but it's not for Tom. In the homeowner insurance, there is a co-insurance issue we need to solve. Besides all this, you do not have a personal liability umbrella insurance. In the estate part, both Tom and Aaron's will do not have provisions for children, especially the 5-year-old twins and Riley from Tom's previous marriage. And most of your assets will pass through probate, which is open your personal and private information, is time consuming and costs a lot of money. In other respect, Tom has no employer-sponsored retirement plan. Even though Aaron's university provide tax advantage account for Aaron, she has failed to invest in 403B plan. Okay, here is our analysis. In the fundamental analysis, as mentioned in your advantage, you have strong net worth and reasonable saving rate. However, there is also some disadvantage we need to face with and then solve it. First, the housing and other indebtedness ratio is 43.33%, which means you have too much debt. In the cash flow is deficient, and to achieve your goal, you need to finance your primary residence. Let's take a closer of your net worth. From this graph, the red part is your assets. The green part is your assets. The red part is your liability. Assets minus liability is your net worth, which is the blue part. From this graph, we also can see you have a very good net worth. In insurance analysis, even you have life insurance coverage, but it is not enough for you to cover all your debts and financial dependents, including your children and your father. And no contingent beneficiaries named in life insurance policies. By naming a contingent beneficiary, you can avoid to have money flow to your estate. Money paid to estate are subject to probate, which will incur a lot of expenses and delay. In the homeowner insurance, there is a co-insurance issue. Co-insurance is the percentage of the value that the policyholder is required to insure. The weakness of your homeowner insurance is that you carry 196,000 of insurance. However, your statement of financial position so that the value of your dwelling is 260,000, which means you need a policy with minimum coverage of 208,000, which is 80% of replacement value to avoid the co-insurance issue. As we know, disability insurance is used for people if something unexpected happens, including illness or disabled. Everyone has the disability insurance, but it is also necessary for town to purchase disability insurance. For family with high assets like your family, personal liability umbrella insurance is necessary, which you do not have it. Investment analysis. I know you have coin collection hobby, which is something fun, and you can pass it to your next generations. Which coin collection is also a good and safe investment. This coin collection investment is the safest one, which the coin, after all, is a coin. It still has a value. However, it is illiquid and probably lacks marketabilities. For the equity portfolio, the weighted average beta is calculated as 1.03, which indicates it's slightly more risk than the overall market. And by using the capital asset pricing model, The weighted average rate of return is around 12%. The historical return on the equity is 14%, which means it is outperforming the market. Children's education is the most essential issue for all parents. As we talked before, you expect the twins and Riley to go to the undergraduate school at age 18, and after that, you hope your children will go to 2-year graduate school. Based on this expectation, and we made some assumptions. We calculate that you need set aside for around 150,000 today for each of the twins' education, and around 118,000 for Riley's education. As we talked in the weaknesses part, by renting the candle, the cash flow is negative. Let's go to I will give more details about renting property. The candle was purchased for 110,000 and refinanced at 10.5%. Although you can earn 12,000 as rental income, it is time-consuming and risky to invest money in real estate. Furthermore, you can collect 1,000 in monthly rent, and after subject the expenses of $537.5 and a mortgage of around $1,100, you have a negative cash flow, which means you need to fund additional $780 every month. In tax analysis, it's the same as your financial goal. You want to use tax advantage retirement accounts. We can try to IRA and 403B to help you build your wealth and reduce your tax burdens. The value of group term life insurance in excess of 15,000 must be included in income. After calculation, $440 should be included in Aaron's W-2 as taxable income. As we mentioned, Aaron has failed to use her 403B plan, which your university provides this tax advantage plan for you. In estate analysis part, the purposes of estate planning are to reduce estate tax, avoid probate, and protect beneficiaries, which is the same as your financial goals. So we need to value estate planning. Tom will leave his automobile and business to Justin and everything else to Aaron. But Tom did not take the 5-year-old twins and Riley into his will. The same thing for Aaron. His will makes no provision for the twins. So we need to review your wills and I will give you detailed recommendations later. The other estate part is that Tom wants to transfer the co-business to Justin, which we can achieve these goals. Here is the recommendations part. For the fundamental recommendations, combine the statement of financial position with financial ratio analysis. You have a good emergency fund, enough net worth, and outstanding saving rate. However, you also have excess debts, as we mentioned. Here, I suggest you to pay off all your debts, including auto note and mortgage, which is the goals you want to achieve. How to make it come true? It's not a dream. We can make it come true. So for the primary residence, you need to refinance mortgage at current rate is 3.25% for 5 years, which is much lower than the previous rate. After calculation, you need to pay additional $633.59 every month to achieve this goal. Combined with our previous analysis, see Xiaoyu candle, we can achieve this goal. It's not very hard. It's possible for you to achieve it. Since the life insurance is not enough for you to cover all debts and financial dependence, I recommend you purchase more life insurance up to 300,000 and even to 400,000 to cover the debts. Besides that, name contingent beneficiaries. For the homeowner insurance, increase the coverage on dwelling to 208,000, which is the 80% of replacement value. Disability insurance is protect people for something unexpected happened. Anyone who depends on their income to pay the bills and maintain their lifestyles should consider disability insurance protection. So I recommend you to buy disability insurance for Tom. And it is just a reminder, you need to figure out how much of salary it will be replaced and for how long. Family with high net worth should consider personal umbrella liability coverage, which is the same as your family situation. So I suggest you to choose the personal umbrella liability coverage between 2 million and 3 million to protect the net worth. Investment recommendations. The coin collection is your hobby, so keep coins in a safe deposit is good and safe choice for you. But also, you should always prepare to sell the coin occasionally, especially when you can catch the point which the coin's price the count value will reach the peaks. For the rental properties, it's not necessary to still keep it. Sell the candle and save this amount of money for retirement. For your children's education, a 5 to 9 plan is a good choice for you. This plan is a tax-advantaged investment plan designed to encourage saving for the future higher education. And any withdrawal from a 5 to 9 plan is tax-free if it is used for qualified education. Not only for education funding, you can also treat it as an investment, because investment for children's further education. Tax recommendations. Tom, as a small business owner, he can look to the simplified employee pension IRA. And Aaron needs to take advantage of the 403B plan. There are significant tax advantages for participating in 403B plan, including pre-tax contributions to a 403B plan, and earnings on this amount are not taxed until they are distributed from the plan. Besides that, Tom and Aaron should consider the percentage of salary you deferred into IRA and 403B, and how much of your earning salary you may need in retirement. The estate recommendation. The will is a fundamental and essential part of estate planning. So, for Tom's will, he takes the twins and Riley into consideration under his will. Tom also needs to decide who will inherit which part of your assets. In addition, Tom should decide who will manage his estate as executor. The same thing for Aaron. Need to make will provisions for the twins. You also need to update it regularly in case something bad happens and you do not prepare well. We do not hope that kind of stuff will happen in the future. Besides that, the guardianship of children is an essential issue. We should think twice. It's good for you to name a first and second choice for guardians. I also recommend you to keep the right to change the designation if someone better involved. Besides that, naming a backup guardian and conservator in the will is good to protect. For the estate planning, you need to value this plan. Regularly reevaluate your choice, especially your personal and financial situation changed. For the code business, which is also the Tom's goal, he wants to transfer the code business to Justin. It is very reasonable to achieve this goal using the revocable living trust, which is the best choice for Tom. Using this, Tom can retain the control of the business during his lifetime and transfer the asset after his death. By being revocable, Tom can decide which kind of property will go to the trust and retains the right to change the terms of the trust as his concerns. So here is the estate recommendations. Most important thing for estate planning is that it is not just a simple established estate plan. You need regularly review the plan in case something changed, including the tax law changed or the relationship changed or something unexpected happened. So regularly review the estate plan and be prepared to make change is very necessary. And we can keep in touch in case you want to change your mind or some policy tax laws changed. And consultant with financial planner or attorney for your estate planning is also a good choice. Here is all my recommendations and all analysis of your financial positions. If you have any questions, please feel free to ask me. Thank you.